Hello, and welcome to another episode of Mortgage Chicks with Hot Tips. I'm Elizabeth Hull.
I'm Stacey Van Skank.
I'm Cindy Walker.
And I'm Kim Hairsted.
So today we're going to talk about two words we have been hearing a lot about, ladies, on the news, in the paper, when you go to the gas station, when you go to the grocery store: inflation and recession. So first of all, what is inflation? It's the act of inflating something or making it larger. But as far as like economics goes, it's the general increase in prices for the cost of money. And you may say, well, how does that directly affect the mortgage industry? When people are borrowing less money, less people are investing into the stock market for mortgage-backed securities. Fewer people investing, the higher it goes up. Our interest rates go up conversely because of that. The demand. When the demand lessens, rates go up. It's a little bit crazy. Unfortunately, on the heels of the pandemic, we had shortages and then inflation, and it has just been hard on all of us.
Yeah, inflation is back in a big way, and what that means to borrowers is, it proves to be a stubborn foe. We basically, during COVID, we all kind of went into our cocoons, and we weren't spending, and then the stimulus checks came out, and they wanted to encourage everyone to spend. So everyone started spending a little bit more, going out, going to restaurants, kind of putting money into the economy. And then all of a sudden it's like brakes are slammed on. It's kind of like putting sand in the cogs. They're wanting to slow it down a little bit, slow the spending down a little bit. And now here we are. People are like, well, why are rates going up? What's going on with the economy? Well, they figured that we were doing a little bit too much overspending. They wanted to slow it down a little bit. They're increasing the interest rates because our inventory, as a result, is down. It's definitely still a seller's market, and rates have increased, so that's slowing down our buyers.
So cheap money flooded the market.
Yeah.
Everybody started spending.
Yeah.
Yeah. And there's always inflation and recession. So, people are going to say, what is the difference between inflation and recession? I've done a lot of research on this because, quite honestly, to me, it was a little bit confusing.
Me too.
But the recession,
Yeah.
What's the difference?
recession is, it's a period of temporary economic decline in which that time trade and industrial activities are slowed down. Generally, it's identified in the fall by the GDP for 2 consecutive quarters. So recession, decline 2 consecutive quarters. What happens in real estate? Because that's what everyone's asking me. Because that's what our world is. Our world is what is going to happen in real estate when all this happens. So with inflation and recession, people are going to stop spending money. They're not going to have money to invest in housing. It will slow down, but it's temporary. Once we are marked in a recession, interest rates will go down again, and then our housing market is going to improve. So we have to really get through when they're going to identify that we are under a recession. I went to a conference this week, and some are saying it's going to be a moderate recession, but most forecast a mild recession. So I think that's, short term, but it really is going to be people stop spending money, save money, and then when they have saved enough, then the rates will go down and then they'll start to purchase again. Does that make sense?
It
Yes.
does make sense. And what's that term that you used, Elizabeth?
Oh, I have been seeing this, and I'd love to say that I was the one who made it up, but I have been seeing it a lot on the internet, that we're married to the house. When people say, should I buy now, and you find the house that you love? Well, you can marry the house, but you're only engaged to the interest rate. Because if they start to drop, you can always change that.
We can help you with a refinance.
Absolutely.
So it does appear that the market's cooling off with rates and on the rise. And as we see the market to begin to even out, more inventory becomes to the housing market. So we ask yourself, should you buy now? Is that a question? That's a good question. Should you buy now or should you wait? Well, I think the housing market is going to continue to rise. You're not going to see housing prices go down. You may see them stable out a little bit, but you're not going to see them go down. And rents are going to continue to increase exponentially. So interest rates are going to level off pretty soon as well. So if you buy now, like Elizabeth said, you're only engaged to that rate. Right. So the rates, 18 months to 2 years, you're going to see the rates go down again, and you're going to refinance out of that. But at least you're going to have a house now,
Right, and the
because-
value and the
and the
equity's
value
building.
now, and you're going to build that equity, and you're not going to be throwing that money away in rent.
Right.
And I will say, I also did see a chart where they were going over the last few recessions, you know, the last 10, and really only in one did the housing market take such a dip, and that was in
2008,
2008. But other
2009.
than that, housing prices still, even through other recessions, either held strong or even grew a little bit.
3%.
Right.
Yeah.
I mean,
so,
and we're okay with that.
Right.
You know, that's
Yeah,
a good
I
market.
mean, it's been at 30% right now in
Right.
the Tampa Bay area.
Yeah.
So if it levels off to 10%, you're still better off buying now instead of renting.
Absolutely,
Yes.
absolutely.
They brought up at the conference, someone said, because people are saying, when I talk to them, we're just gonna wait, we're gonna wait for the house prices to go down. House prices have not
Not gonna
declined in a
happen.
decade.
Right.
So are you gonna wait a decade to buy a house?
Right.
Because that's what you're gonna do if you're waiting for them to go down. Now,
Absolutely.
the appreciation that they forecast in our area is 12 to 13% next year. We've been up into 30 and 40% for the last few years. They're still gonna appreciate, just
Yeah.
not at a rapid pace.
It's better than the banks are paying.
Well, and exactly. So is
Yeah.
real estate once again and still and will always be one of the best ways to build your own personal wealth. And I believe you said it best in one of our previous episodes about paying 100% of your landlord's interest or building your own personal
Right.
wealth.
Well-
You know, so at the end of the day, if you have to spend the money and things are more expensive, wouldn't you rather spend it on yourself and grow your own
So
personal
true,
wealth?
yeah. 48%
For
of
sure.
homeowners have more net worth than people that don't have homes, that don't own a
Absolutely.
home.
It's the best equity builder for sure.
Absolutely.
For sure.
All right, so to recap, it seems like inflation and recession are something that we just kind of go through in waves. And it's something that, like growing pains, we've got to go through, but it shouldn't paralyze us from moving forward and growing our own personal wealth. So don't let it discourage you from getting out there and shopping and looking at your real estate opportunities, and call one of us, because it might not be as bad as what you think. Thank you for watching another episode of Mortgage Chicks, and don't forget to follow us where you listen to your favorite podcasts.
If you have any questions or ideas for topics, please email us at mortgagechicks@vandykemortgage.com.
Please follow us on Facebook at Mortgage Chicks with Hot Tips.
You can also find us on YouTube at Mortgage Chicks with Hot Tips.